This CoreLogic data, which I didn't make up, I just took the time to read the report of April 2025 summary of the property market in Australia.
The RBA's rate cut has delivered the property market a boost over the weekend.
It might have only been one interest rate cut, but it's already shaking up Australia's property landscape.
The RBA tariffs and the looming housing boom. How do you seize the moment before it's gone? All right, mate, strap yourself in because the numbers just dropped. It's a mix of economic apocalypse meets the greatest wealth transfer of our generation. Let's dive straight in. Australia's wealth engine, it's property. CoreLogic estimates the combined value of Australian residential real estate had a mind-bending 11.3 trillion in March. That's right, over $11 trillion tied up in brick and mortar and counting. Meanwhile, outstanding mortgages just total $2.4 trillion, a measly 21% loan-to-value ratio across the country. And listen to this, 55.3% of the total Aussie household is locked into property. This is exactly why the banks, the government, and the RBA will burn their last dollar before they ever let the true property crash happen. National dwelling values flickering back to life. After copping 3 straight months of declines, national dwelling values finally squeaked into positive territory in Q1, up by 0.7% nationally. Capitals rose 0.5%. Regional markets, you say, a stronger 1.4% gain. But before you start popping the champagne, the annual trend still losing momentum. Values only rose 3.4% over the year to March. House values crawled up to 0.5% this month. Units, 0.3%. And the premium for houses expanded to 31.5%, up from 25.8% in January 2023. Our property markets absolutely fragmented. Some areas booming, others dead on arrival. But remember guys, smart investors always outperform the averages. Capital cities, same country, different stories. And you might ask, what about each state? Well, they're all running its own crazy race. Early in the cycle, I'll show you later, prestige suburbs led the charge. Right now, it's the lower quartile suburbs across every capital city that's outperforming the blue chip areas. Medium price properties are rising the fastest right now. State by state breakdown. Well, let's look at Perth. Property values rose by 11.9% over the past year, sitting just 0.05% below their all-time high. And for Melbourne, up 0.5% this month, still down minus 2.6% over the last year, sitting minus 5.6% below its 2022 peak. And for Hobart, fallen really hard. Home prices minus 12% below the March 2022 peak. Now, what about Brisbane? Well, Brisbane has saw a 8.6% gain over the past year, sitting at new record highs. And for Sydney, well, we kind of limped at 0.9% annual gain, still minus 1.4% below its September 2024 peak. And for Adelaide, just to put it simple, it's still holding up. What about Canberra and Darwin? Canberra and Darwin, well, they're still struggling really hard. Now let's move to stock levels. Right now, it's still starving. Fresh listings are 4.1% below the average, just under 40,000 new listings over the 4 weeks to March 30th. Total listings, you might ask, 11% below the 5-year average at around 141,620. And you know what's worse? Most new listings are junk. And you might ask, where are the quality A-grade properties? Well, owners are holding on tight and transaction volumes are cooling down. According to CoreLogic, it estimates 42,553 national sales in March. In terms of annualized sales, 520,212 sales, up by 4.6% higher than last year and about 4.1% above the 5-year average. However, sales are still down by minus 2.1% from December's peak. And right now, selling is taking longer than before. Median time to sell nationally? Well, 40 days, up from 30 days a year ago. Regionally, it's about 50 days. For capital cities, it's 35 days. Also, homes are sitting longer, buyers are hesitating. However, the window to grab deals is open, but it won't stay open for too long. Now, let's talk about vendor discounting. Right now, it's tightening slightly. Median vendor discounts pulled back slightly by minus 3.5%. However, buyers are still negotiating, but you might ask, well, what about sellers? Well, they're not budging as much. And that's a sign, because I get the feeling the seller smells what's coming. Now let's look at clearance rates, okay? This is, in terms of the stats here, it's dropping again. In terms of capital city clearance rates, well, it's now back under 60% at the end of March. Adelaide is 64.5%, Sydney around 62.9%, Melbourne 62.3%, Brisbane and Canberra, well, the mid-50s. And now looking at the rental market, man, it's still in crisis. Rental values only rose by 3.8% over the last 12 months, the lowest annual change change in 4 years. I mean, look at back in COVID. Rents grew around 2% a year. So we're not far off that normal again. Maybe thanks to all the government intervention to rent hiking. So right now, let's look at the gross yields of each capital city. For Perth, it's creeping up by 4.3%, Canberra 4.1%, Hobart 4.4%. And for Darwin, the yield is so crap, it's decreasing by far. Avoid bloody Darwin. Now let's look at dwelling approvals and credit. Right now, it's weak, but stabilizing. I mean, to start off with, let's look at dwelling approvals. It's just about minus 1.8% below the 10-year average. Unit approvals, currently it's slightly outperforming houses. In terms of detached housing approvals, 5% below the 10-year average. In terms of my sector, which is the finance and lending sector, investor and lending is still very strong. The bank is still lending money. If I look at the whole national average, new home loan commitments rose by 1.4% last quarter, which means there was much more applications sent into the banks. In terms of first home buyer lending, it rose by 1.5%. But overall, in the last 5 years, investor lending dipped by minus 2.9% last quarter. But on a positive note, it's still 22.2% higher than it was a year ago. Now, just to let you guys know, first home buyers now account for 29.2% of all the new owner-occupied loans. And right now, you might be asking, what are my smart investors doing? Well, they're all moving, right? They're refinancing, they're pulling out equity, they're stacking up the cash reserves, they're getting ready to strike while everyone else is still napping. Some are even locking in deals with slightly higher rates so they can secure this property before the RBA starts slashing rate due to Trump's tariffs onslaught and the market going to FOMO mode. Again, guys, it's never too late. There's always deals, the discounts, the golden opportunities to get into the door right now. My final message to you is the CoreLogic data isn't just interesting. It's a giant blinking neon sign screaming at you right now to act, to move now. Otherwise, you'll just get left behind. Because if you want to play this cycle right, you want to build generational wealth while everyone else panics, remember guys, you can reach out to me, you can book a consult with me, either a 15-minute or 60-minute call. Let's get your strategy sorted in terms of holistic lending for you so that for you and your family, you can start stacking those assets before the window slams shut. Again, guys, let's end generational poverty in your family. And if you enjoyed this video so far and you enjoyed this channel so far, give me a subscribe, like this video, hit the bell notification for the next upcoming video, and I'll see you in the next property roast.